$15.7 billion in cash plus $29 billion in equity. I'm telling you, Maya, this McCormick and Unilever deal is a masterpiece.
A masterpiece? Nate, Unilever walked away with 65% of the combined company. McCormick bought the groceries and let Unilever keep the house.
Hey, to build a $20 billion flavor empire, you pay the premium.
Well, I hope the European regulators have an appetite for it, because they're already sharpening their knives. The rundown?
$4.9 trillion. That's what the broader M&A market hit last year. Just total panic buying.
Panic is the exact right word. Everyone's terrified of the post-globalization economy. Companies are reinventing themselves at breakneck speed.
And paying for it. Q1 2026 equity issuance just surged 43%, $256.8 billion globally.
Which is huge, but I'm looking at the geopolitical headwinds. These deal windows are going to slam shut. Plus, the regulatory friction in Europe is getting out of hand.
You mean the European Commission's new foreign subsidies regulation?
Yes. Lawyers are literally sweating over this. The EC is launching surprise ex officio investigations and throwing a massive wrench into cross-border timelines.
Which means higher billing hours for the lawyers. They'll survive. First up on the rundown today, Masi Inc. just bought Waji Group.
Right, and the press release claims they're now a, quote, full-stack AI player.
It's a great buzzword.
It's garbage. I've read the filings. Huaji is basically a legacy cloud analytics shop. Marseille slapped an AI label on the deal to distract from their core margins slipping.
Don't hate the player, hate the game. Speaking of massive numbers, Carlyle Group is taking a majority stake in MAI Capital Management. They're valuing the firm at over $2.8 billion.
Oh, come on. $2.8 billion? For a registered investment advisor. That multiple is completely unhinged.
I completely disagree. Wealth management is the holy grail right now. You get those assets, they are sticky. People don't move their money once it's parked.
They do when fee compression hits and robo-advisors undercut them by 50 basis points. Carlyle is buying at the absolute top of the market.
We'll see. Next up, Primora Services is buying Pinecrest Electric, $422 million in an all-cash transaction.
Now that is actually smart. Primoris is just buying electrical contracting capacity to expand their data center footprint. No buzzwords, just picks and shovels.
I love a boring cash deal, almost as much as I love this fitness tech merger. Playlist, the parent of ClassPass and MindBody, is officially merging with EGM.
Consolidation was entirely inevitable there. The churn rate in fitness subscriptions is brutal.
I'm just hoping they combine all my logins. I have like 6 different QR codes to get into a spin class.
You don't go to spin class, Nate.
Not the point, but none of these are the main event today.
Not even close, because someone just decided to spend $44 billion to monopolize your spice rack.
Unilever and McCormick, creating a global flavor behemoth with $20 billion in estimated 2025 revenue. I really want to know how they structured that $15.7 billion cash payout. The big one. $15.7 billion in cash. Just think about the sheer logistics of wiring that kind of money.
I'm way more focused on the equity split, Nate. Unilever walks away with 65% of the combined company.
Valued at $29.1 billion.
Exactly, plus the cash. So my very first question when I read this morning's press release was, wait, is McCormick buying Unilever's food business, or did Unilever just buy McCormick and slap a different label on the jar?
It definitely has classic reverse merger vibes. But look at the big picture. You put McCormick's spice aisle dominance together with Unilever's mayo and bouillons. You're looking at a global flavor behemoth with $20 billion in projected revenue for 2025.
Behemoth is the polite word. Bloated is the word I'd use. I dug into the financing structure in the footnotes. They're taking on a mountain of new debt to fund that cash portion. The interest expense alone is going to eat their operating margins alive.
Oh, come on. It's a masterpiece of portfolio rotation. Unilever wants out of slow-growth food to chase high-margin beauty products. McCormick wants global scale. It's a win-win.
Is it? Almost $45 billion in total consideration. Voices.
$256.8 billion. That's the Q1 global equity issuance number, up 43% year over year. But then you read the analyst notes, and everyone is suddenly terrified of geopolitical tensions slamming the deal window shut.
Geopolitics is the easy excuse. It sounds very smart on a morning panel. But if you talk to anyone actually trying to close a cross-border deal right now, they aren't talking about geopolitics. They're sweating over the EU.
The new foreign subsidies regulation?
Exactly. The FSR is an absolute nightmare for timelines. I was reading a memo from a regulatory expert yesterday, and they're basically warning that standard risk assessment is totally out the window. The European Commission is launching surprise ex officio investigations.
See, I think the panic is a little overblown.
Wait, really? You think surprise regulatory probes are overblown?
I think bankers love to complain when they have to do actual diligence instead of just hitting copy paste on last year's pitch deck.
Oh, come on.
I'm serious. Look, the broader M&A market hit 4.9 trillion last year. Companies are frantic to reinvent themselves for a post-globalization world. A new European disclosure form isn't going to stop the train.
It's not just a form, Nate. They can pause your transaction indefinitely. If you're doing cross-border M&A right now, your timeline is entirely at the mercy of Brussels. You can't price in an unexpected 6-month delay when debt costs this much.
Fair. The unpredictability is a massive headache. You can't build a model for a surprise investigation.
Which is exactly why I'm fascinated to see how Brussels handles this McCormick and Unilever tie-up.
Oh, the regulators are going to have an absolute field day with that one. We should probably talk about what the global antitrust watchdogs are already whispering about our new flavor behemoth. Spill the tea. I'm telling you, the group chats are melting down. Dealmakers in Europe are absolutely sweating this new foreign subsidies regulation.
I mean, they should be. The European Commission is just handing out surprise investigations like parking tickets right now.
It's totally blowing up cross-border timelines. You've got teams working 18-hour days trying to reinvent their strategies because suddenly every state subsidy from the last 5 years is under a microscope.
Oh, please, spare a thought for the poor, exhausted bankers. I'm playing the world's smallest violin for them right now.
Come on, it's a nightmare for execution.
Nate, the broader M&A market hit $4.9 trillion last year. Trillion. Driven entirely by this frantic post-globalization panic. They can afford to hire a few more compliance associates.
Fair, but you're looking at Q1 equity issuance surging 43% year over year. You have $256.8 billion just sitting there waiting to be deployed, and geopolitical tensions are practically slamming the deal windows shut.
That's exactly why regulators are stepping in. When you have that much capital flying across borders at breakneck speed, someone has to check if state money is quietly tipping the scales.
You always take the regulator's side. Just once I want you to admit a government form is annoying.
It's annoying, but it's also necessary. And if you think the EU subsidies headache is bad, just wait.
Oh, you mean the incoming antitrust bloodbath?
Exactly. Wait until the global watchdogs get their hands on this McCormick and Unilever flavor monopoly. You want to talk about regulatory posturing? That $44 billion spice rack is about to get heavily audited.
Let's talk about that spice rack, because I have a lot of thoughts on that $15.7 billion cash portion. Tomorrow's radar. Looking at tomorrow, my eyes are glued to the EU. Regulators are already circling this McCormick and Unilever tie-up.
It's that new foreign subsidies regulation. I read the briefing notes this morning. It's causing absolute panic over there.
Panic is a strong word. Bankers always complain when Brussels adds a new form to fill out. It's just another hurdle.
Oh, come on, Nate. You know that's wrong. They're launching surprise ex officio investigations. They're literally showing up unannounced. That tears up your entire cross-border deal timeline.
Okay, fair. When regulators start giving pop quizzes, the risk committees lose their minds. And with a $44 billion flavor behemoth on the line, someone is definitely sweating through their suit.
Exactly. Plus, Q1 equity issuance just surged 43%. The cash is ready to deploy, but closing is getting treacherous.
Which is why I'm watching regional banks tomorrow instead. CVB Financial and Heritage Commerce just got approved. That's going to trigger a massive wave of mid-market copycats.
I'll believe the copycats when I see the actual filings. Until then, keep reading the footnotes.